Good day, everyone. Those of you who do not know who I am, my name is Leroy Phillips, and I just wanted to bring you guys my journey from 1,000 to maybe $1 million or over using my auto trading software. Now, with auto trading, it's not always going to be every single day is going to be a winner. What this software basically does, it trades within the confines of the current market conditions that you're in. So it trades the periods with the most volatility. So basically what we're looking for is that aggressive move in the market. Now, sometimes you get it often, sometimes you don't get it often. And what the software does, it trades in a very liquid way where if the price is going up, it's going to follow the price. If the price turns and goes back to the downside, it's then going to close that buy and go into a sell. And I would like you guys to basically see exactly how the software works over a period of time on its journey. Well, on my journey. So it's a journey between myself and the software. Okay. So as you guys can see, it first took a buy trade, but the price did not continue to the upside. It turned and came back to the downside. So what did the software do? It closed that buy and went into a sell. Okay, and note that we're on the 1 minute time frame. Okay, so it went into a sell, and if this price does not continue moving down and starts to go back to the upside, it's going to close that sell and go into a buy. Okay, and what we're looking for is price continuing to progress to the downside. It could continue moving slow. Once it's not too choppy, it's going to be great for the auto trader. So if it continues coming down slowly or comes down very fast, it's going to be very, very good. If it goes back to the upside very fast, it's also going to be very good. Okay, so right now, it doesn't matter really what happens. Once we have a continuous move in one direction, we will be profitable until certain conditions are met to exit the trade. And all of those exit conditions are built into the software. Okay? We will have some days or some periods where it's very choppy. And recently we've had some very choppy periods around from 8:30 to 10 o'clock. It's very choppy. So in periods like that, we will incur some drawdown or some stagnation on the account. Okay, but when we go into that period when we get a lot of volatility coming in either at 8:30 or 9:30, that's where we're going to make the bulk of our profits. So this EA is also not one of those EAs where it has a very high win rate, right? If you go into very choppy periods, you're going to have a low win rate. But when you do have a win, your win is substantially bigger than the trades that you lose. Okay, so I'm just going to allow you guys to watch. From now, you can just pay attention. This account was started at $1,000. It's now down to 844.81. So we have gone through a slow period. We've had some ups, we've had some downs, and it's only been running for, let me just show you guys the history here. It's, as you guys can see, when I put the funds in, it's basically only been running from the 21st of August, right? So that's approximately, let's say, 10 days or so, give or take. It's been running for about that period of time. And let's go through some of the trades here. I know some of you guys would want to see what's been happening. Let me just try to. Okay, so look at this. This was a buy trade, and it closed that buy and took a sell. So you lost $1.68 on the buy. You made $26 and $26.33 on the sell. Okay, and this one was around 8:30, right? And then you have 9:30, which is the equity market open. You can see here, it tried to take a buy, lost 5:30, tried to take a sell, lost 9:43, tried to take another sell here, lost 1:48, and then it tried to take a buy, lost 8:30, and you can see here that it, okay, I think I went into another day here. So only 2 trades on that day, right? Only 2 trades, 1 buy, 1 sell. The 5:30 was the buy and the 9:43 was the sell, and they did not go in the direction that we would like it to go. It did not continue. It just was a very short trade, didn't really go anywhere. So we ended up losing out on these 2 positions at these 2 periods, right? And we had the next day, which is the 22nd, we had a sell 168, we had a buy, lost 8:30, and then we had a sell, right? And this is around the 8:30 period, right? So this sell went until 9 o'clock. You can see that here. It went until 9 o'clock. We were able to make $27.95 on that one. So the losses are relatively small compared to when you make a profit. So the only days where you sustain like a drawdown period for that day is when the market doesn't really go anywhere, around 8:30 to 9 and 9:30 to 10, right? So only if the market doesn't really go anywhere within that period of time, you would sustain drawdown, okay? And in a lot of cases, more than few, the market actually makes big moves around that time. So you have to take the bad times with the good times. Overall, you'll have more good times than bad times, and the account will grow, okay? But you will have some drawdown period from time to time. With auto trading, you just need to stick it out. You're going to have good days, you're going to have bad days. You can't expect with an auto trading bot that you're going to just make profit only all the time, because of the limitations within, how can I say, there are limitations within when you can, when the bot can take profit. And I find that the strategy that I'm using is extremely powerful, probably the most powerful of all auto traders, because most of the auto traders out there, they go deep into drawdown, floating drawdown. So they have sometimes, even if it's profitable, it's making money. You may see your balance. Let me just go back over here. You may see your balance. Let's say you started at 1,000. You may see your balance at maybe, let's say, 1,200. So you made a profit, right? But then over here, your equity might be at $800 because you have so many open trades that are in a loss. And then you have to wait for the price to go back in your favor, or wait for the EA or whatever you're using at the time to try to salvage those losing positions, right? And sometimes it's able to, and sometimes it's not. Sometimes you have those running trades on for months at a time, sometimes longer. So I don't like that. So I designed a system that was powerful enough to either make me a profit quickly, or I will cut my losses quickly, right? So if I take on a drawdown of, let's say, in my case here, of approximately 100 and let's say $56 or so, then I take those losses, and it's realized losses. right? When I make my gains, it's realized gains. It's not going to be floating in profit or floating in loss. I make my profits today. This is a day trading EA. It trades during the course of the day. It trades for a specific period of time, and it has specific profit targets or take profit conditions or conditions to close trades, right? It's very, very to the point. So you guys can see how it's working. You guys saw it took the buy at this level and it didn't go anywhere. Price started to come down. It took the sell because it realized it's smart enough to be liquid in the market with the price. The price moves in waves and the EA moves with the price. So the EA trades in waves as well. Okay? But it's going to look for a specific distance or length for a wave to be in order to close out a trade. So if the trade moves a specific distance, then the EA will close that trade based on certain conditions, right? If it's able to reach a set profit target, then the EA will close that trade once it hits that specific profit target, right? In terms of a dollar figure, right? So you may have your profit target for the day. Once the EA is able to reach that profit target for the day, it will close your trade and pause until the next day or the next trading session. Okay? So this one's going nicely to the downside right now. I'm sure it has not gone to the downside enough for the software to decide to close out profits. So if the market decides to go back to the upside, this trade that we're in right now, that's approximately $8 in profits, will end up going back to break even, or it may end up going back to taking on a small loss and then going to the long side, right? If 9 o'clock, which is in the next 15 minutes, arrive whilst this price is going to the downside, the software will close the trade at 9 o'clock and bank the profit. And then at 9:30, it's going to look for another entry, right? And it will just flow with the price and allow the price to move in the direction that the price wants to go. So I'll leave you guys here. Just watch, see how it plays out, and I'll be back with you guys in a bit. So guys, we've got approximately 6 minutes before the EA closes the trade. We can see the price starts to push back to the upside. It's not going to enter long. It's going to wait until it hits the stop of the sell trade. Okay, so when the sell trade gets stopped out, or the condition to close the sell trade is met, then it will look to switch directions. We have about 5 minutes left. So if this turns and goes back, we'll be giving back the profit. If it continues the downside, we'll be making more profits. Okay, so the aim with this EA is not to try to predict where the price is going to go. The aim is to be able to follow the price wherever the price goes. Okay, that's what this EA was basically built to do. Follow the price wherever the price goes for a certain distance. So once the price is able to progress a certain distance, we will be able to take profits. So we're not looking for these small profit trades. We're looking for these large profit trades within a specific period of time. The market generally is more volatile between 8:30 and 9. So that is a very volatile period of time. So the market generally moves big in those spaces. So we're looking to capitalize on that big move. 9:30 to 10 o'clock, market generally moves big in that space of time, and it moves very fast as well. So we're looking to capitalize on that space of time. Okay, so it looks like we just had a pullback and it wants to continue pushing down. Let's see how it goes. All we're doing is allowing the price to do what it wants to do. Over time, I may bring one of my other strategies into the EA, and that strategy is called the Liquidity Map. It's basically a tool that I created where I don't want to say it knows, but the market makers have specific areas on the chart where they do certain things. For example, let me try to show you what I'm talking about. So you see this type of price action that's happening here, this sideways, choppy type price action. The market makers have specific zones like this. They have many zones like that, right? So they may have one here, they may have one here, they may have one here, and so on, right? But when it gets to specific zones, you're going to see bigger type reactions. And that's basically what I'm going to look for, right? So I'm going to, my software, not this EA, but my next software, which is the Liquidity Map, it basically looks for these zones, finds these zones to you, and once you see the price within these zones, you already know what to expect. You're going to expect it to go consolidate sideways, or you're going to expect it to, after hitting that zone, it's going to reject aggressively to the downside, or it's going to go sideways. If it goes sideways, then you look for it to go to the next zone, right? Or it's going to just go sideways and come down below the zone and continue coming back down to the next zone before it maybe bounces up again or goes sideways again and then continues coming down. So these zones are areas where you're going to get the best type of entry. But you need to understand price action to a certain degree, because you may, let's say you're looking for an entry to go short here. It doesn't mean that you can't take a short there. I mean, the price did come down, as you can see, it did come down, but this is not a level where you probably would have wanted to take a long-term short to the downside, because these levels create specific types of price action. So this level that we're at is more of a corrective type level. That's the level where the market goes into correction. It could be a bigger correction, it could be a smaller correction, and That correction could be bigger on the downside, or that correction could be small and more for the upside, right? So you need to understand what you're looking at these levels. It's not just about entering a trade once the price gets to these levels, which you can, but if you're doing that, you're going to have to be scalping. If I was scalping, okay, so it's 9 o'clock. You can see the EA closed the trade. So we were able to bank $10.58 on this trade. You can see that the first trade that it took, we lost $2.80. So we lost $2.80 and we were able to make $10.58. So small loss for a big win. Once the market moves in any specific direction from your entry, if your entry is short and the market goes down, you're going to be able to make profit if it continues to go down. If your entry is long and the market continues to go long, you're going to be able to make profit. Because you could have been entered into a sell and the price does not go down, it goes up. The EA will switch the direction and put you into that buy trade. So it's not a case where you're going to be entering on a long setup and the price doesn't go up and it goes down and you're in this long period of drawdown. No, the EA is dynamic enough to switch directions with the price. Okay, so I'll leave you guys and I'll be back in the next 30 minutes. Okay, because the next trading session will be at 9:30. So I'll be back in about 30 minutes with the next part of this day. Okay, bye for now. See you guys soon.